mining. Okay, shares in TMX Group have come under pressure today, but the broad market is down. And in fact, TMX stock is up about 26% so far this year. Revenue in the latest quarter jumped 15%. Let's get more from John McKenzie, CEO of TMX Group. John, thanks very much indeed for joining us. Give us one highlight of the quarter. What was the most interesting thing, do you think?
I mean, probably the most interesting thing, Andy, is actually how broad-based the strength was in the business. And, this has been an outcome of a deliberate strategy over a number of years of really diversifying what TMX does, both in terms of the products we offer to the investing public, but also the geographies we offer in. So the fact that we saw strength both in our data and insights business, but also our trading business and some recovery in the capital formations piece, that's really the headline here, is that we had strength across the board in a very diversified portfolio.
So the capital formation, is that, for example, revenue you would get when there's IPOs? Because there's been such a drought in Toronto, as you know, this year.
Yeah, so capital formation's got two pieces in it. So about a little over half is that piece around capital raising. So it's the IPO piece, but it's also the secondary raising of companies raising new money on the market. The other roughly half of the business is actually the services that we provide broadly to both public and private companies. And again, that's a deliberate growth area where we've been trying to really provide the whole suite of services a company needs if they're raising capital from investors, be they public or private. Mm-hmm. But that first piece that you talked about, the IPO piece, is interesting because you're absolutely right. It's been a very quiet IPO market here for a number of years, but we have seen some good traction on a couple of new deals getting done. And you would have talked about them already in terms of the Go residential REIT that went live, or we had a new mining company on the venture exchange. So we actually have brought 24 new companies to market, not always through IPO because we have other vehicles. But we're actually number 2 in the world right now in terms of new listings. So while we look at those domestic headlines are challenging, globally, this continues to be a market that can finance things. And the fact that we've done some big financing of big deals as well, like Definity, like Kiera, who did big capital equity raises to support their M&A activity, those are signs of real positive strength in the market.
Your so-called global insights segment is your biggest source of profit. Can you remind us what that does, please?
Yeah, there are 3 core business lines in there, Andy. So it's what I'll call the traditional market data business. That's our data links business that provides data, insight, information on the Canadian markets we operate all around the world. We have our Trayport business, which is a London-based energy market where we aggregate really all the largest energy markets in the world. And there's great tailwinds behind that because energy is in a period of both growth and transition. And the third pillar, which is more recent to us, is an index and benchmark operation. So this is based out of the US, and it really focuses on building indices and information and services for the ETF community and other asset managers. And as you well know, the ETF community has been one of the strongest growth areas in global capital markets. I'm going to give you a quick stat. The first half of this year, we listed 123 new ETFs on the Toronto Stock Exchange. The record last year was 127 for the whole year. So that innovation and that pipeline that's coming from so many manufacturers continues to grow and grow because it's solving different problems and different interests for that retail client base. So those are the 3 areas we've been investing in. All of them have been growth drivers for us.
That index/ETF business, that's Vetify Holdings, is it?
That's exactly what it is. And we made 2 additional new investments this year to help bolster that. We bought out a fixed income operation in the US so we can provide now more asset classes in our suite of products. And we recently acquired in the last quarter a business called ETF Stream. This is London-based. It's going to give us the ability to really help produce, distribute, and market ETFs to the retail audience there. So it's all part of the ecosystem we're trying to build to help the ETF manufacturer go right from the idea, the index, the benchmark, but also who are the investors and how can we help them tell their story. And that's what we think our role is as a market operator, is to really be that end-to-end connective tissue for the industry.
Just remind us, I know this is not part of your core mission, but ETF providers, how do they make their money? Because the MER is so low. Why do they launch all these ETFs?
Well, and actually that is part of our core mission, because if we can provide these capabilities at a very low cost, the value in the ETF model is really about scale. And so their underlying operations are a real low cost base. The benchmarks you can use, if we provide them, they're very low cost. So you can operate with these small MERs, and really we collectively grow that success over time. Like for example, our fee model in a lot of these is based on the assets under management. So our success is tied to the success of the ETF. And the more they're able to grow assets under management, the more they can have in their portfolio. And I mean, that was another record for the first half of the year, is the assets under management we now have listed on ETFs was an all-time record of over 600 billion.
Are you something of a hybrid? Because I know Raymond James has a buy on your stock, but they reckon that your stock is trading at a discount to market providers, but at a premium to exchange companies. So you are a market provider, are you?
Well, we are providing markets, but we're really a technology-based business. So everything we do is technology-based and it's scalable. So I think that a lot of the investors that look at us see that we have that outsized growth potential to a lot of our comparatives. And you saw that in the results, that kind of double-digit growth, but kind of puts us at the top of the peer group globally, and it's what we're trying to do quarter after quarter.
We'll have to leave it there. What about, just finally, what about the dividend? You don't pay a huge dividend in terms of yield, 1.6%. Given that a lot of your businesses are pretty predictable, would you ever make yourself more of a yield stock?
Well, really our shareholders are looking more from the growth perspective. So what we do on dividend is we target a payout ratio. So, and actually similar to a lot of our peers. So we target 40 to 50% of all of our earnings being paid out in dividends. That's what gave us the confidence and strength to go up 10% on the dividend this quarter. We went up another 2 cents. And so it gives a good indicator to the investors down the road that as long as we continue to grow the company at double digits like we're expecting to, that dividend should grow with it. So it should be over the long term quite predictable.